Are you worried, Alberto, about the latest escalation in this? We'll call it a trade spat, shall we? We'll avoid the war word. But are you worried about the latest escalation of this spat between China and the US?
The numbers are small, even though the signal is negative. So if you look at the actual amounts of taxes compared to the trade relationship, which is in the range of trillions of dollars, then it's a relatively small amount. However, China, for now, has been balanced in the reaction. They've been quick, but they've been relatively muted. They've been proportionate and probably smaller than they could have been in responding. The worry is that this could escalate in a tit-for-tat array of further restrictions. And the world and markets are not ready for this at this stage. Momentum in growth has decelerated. There is more geopolitical risk across Eastern Europe, in other parts of the world. We're not ready for, it's not the ingredient that we need across markets. However, probably markets have tend to overreact to the compared to the size of the measures that we've seen so far. And China is still very, very balanced when it comes to responding.
The market reaction, though, Julian, it's an obvious one, isn't it? Stocks are falling, bond yields are coming down, money into gold. The haven currency is the yen. It's rising against all 16 of its peers. These sort of days are playing out as expected now, aren't they?
Yes, they are to a degree, and we're dealing with short-term noise versus what the longer-term destination is. And as your correspondent said, I mean, this is a tit-for-tat exchange at the moment, and I would say to you that if we can reach some accommodation between the US and China in the next few months, then that's fine. But if we go on from here and the trajectory does begin to point from left to right, then obviously that becomes a lot more concerning.
Who's to say we're going to reach an accommodation, Alberto, between China and the United States? That's what everyone's going to be hoping for, aren't they?
I think here China is the adult in the room. They're taking the long-term view rather than playing the populist card. One consequence of this, we think, is that you talked about safe havens. The U.S. dollar and U.S. assets are gradually going to lose safe haven status. It's not going to happen in the next 3 months. But as protectionism and populist actions escalate, and the Federal Reserve is hawkish, and there's more issuance of U.S. Treasuries to fund a fiscal stimulus, investors want alternatives